Good morning, everybody. It's Wednesday, December 18th, 5:28 a.m. Central Time. Grain markets are mixed. March corn futures up 1 at 444 and a half. January soybeans down 9 cents into fresh lows, 967 and 3/4 last trade. March Chicago wheat up 1 3/4 at 546 and 3/4. March Kansas City wheat up 1 3/4 at 554 and a quarter. March spring wheat up 3.5 at 598 and a half. We've got some news regarding the government spending bill. Let's start there.
So, if approved, the Stopgap U.S. government spending bill will include additional economic assistance for farmers. The bill extends the 2018 Farm Bill for 1 year and also provides $10 billion in economic assistance for farmers. Numerous ag groups have advocated for additional economic aid due to challenging markets and severe weather. The bill also includes policy that approves the year-round nationwide sale of E15 fuel. The House is expected to vote on the bill Thursday night. It will then go to the Senate for approval before the government shutdown deadline on Friday night.
In typical U.S. government fashion, they're waiting till the last minute. This is a 1,547-page bill, and they're going to vote on it tomorrow night. So I'm sure, of course, that they'll all have time to read through the entirety of the text here. Direct payments are coming. Direct payments are coming. And that language was included here. So you guys, if you're a grower of corn, soybeans, wheat, other crops, the direct payments are coming. And whether you're a fan of that or not, that's up to you. I don't really have an opinion on it. We ran this slide earlier in the week, and I'll show it to you again. We ran a survey of our premium subscribers. Are you in favor of these direct payments that appear to be inevitable at this point? And 54% of our crowd said no, we're not in favor of the direct payments. And we discussed the reasoning. You get these direct payments, and it's probably going to result in high cash rents. They're going to stick around for a little bit longer. Land values that continue to remain sticky. It's going to keep a lot of our subscribers came back and said, Joe, this is going to keep my irresponsible neighbor in business. The guy who was going around the neighborhood bidding up cash rents, the guy who's buying new equipment every year when he can't afford it. This is a bailout for him. Or maybe I finally had a chance, given my responsibility, given the fact that I acted accordingly and I was not irresponsible. This is time for me to get a leg up on my neighbor. Right now, he's going to get bailed out. And I understand the yes part of it too. It's been a rough couple of years. Farmers going to lose money again this year. So I understand both parts. I don't have an opinion, but these were the opinions of our subscriber base. Paul Neiffer was up all night last night putting together details regarding the direct payments. You're a grower of corn. How much money are you going to get on a per acre basis? When are you going to get it? What are the limits? This video is going to be taped today, right after I'm done with this video. I hope to have it blasted out by 7 a.m. Central Time. So if you want the details, sign up for the premium deal. It's going to be blasted out at least twice today, once early and then again at 10 a.m. And then it'll be included in tomorrow's emails as well. Come for the news and stick around for solid grain marketing advice. Kind of ran through one of my many philosophies when it comes to grain marketing yesterday. One bushel, one sale. My opinion through experience is that per bushel of corn, soybeans, and wheat that you produce each marketing year, you should make one sale and one sale only for that bushel. You shouldn't hedge and lift the hedge and re-hedge and re-own. None of that's necessary. I think you need to simplify your marketing, and perhaps hearing it from an unbiased third party like myself is something that would be some good food for thought at the very least. We have no interest in selling you anything else. There's no upsell here. We just charge you $50 a month for our information. This is the most transparent product that exists in grain marketing. So you should check it out. Go to standardgrain.com and sign up this morning. You'll want to see that video with Paul. That's must-watch stuff. Honestly, at this point, if you're not getting the premium stuff, you're out of touch because your neighbor's getting it and everybody else is getting it. So you better check it out.
So, as I just mentioned, the Stopgap funding bill will allow for the nationwide year-round sale of E15 fuel. Currently, E15 is only available in a few states during the summer months due to environmental restrictions. The potential for growth of E15 sales is substantial, given that less than 2% of gas stations in the U.S. offer the fuel. The approval is expected to gradually increase ethanol usage. Demand growth will be determined by how many consumers switch to the fuel, of course, and then infrastructure development. The U.S. currently uses about 5.4 billion bushels of corn annually, about 1/3 of total production for biofuel production.
Okay, there are a number of things to remember here. So they want to go nationwide with E15 and allow it to be year-round. Here's a couple things to be aware of. They're not mandating E15. what they're doing, they're going to keep basically the RFS intact, I believe, as it stands, with regard to ethanol. And the RFS, not directly, but essentially says, E10 is kind of the deal. That's about where we need to be to hit the RFS target. If you go E15, that's optional. The fuel sellers, that they can go that route if they want. E15 consumption was about 1 billion gallons last year, and total ethanol consumption was just over 14 billion gallons. Remember, you can't just go selling E15 in any gas station. You need upgraded infrastructure and pumps in particular. E15 pumps require upgraded seals, hoses, gaskets, dispensing systems to handle the increased ethanol content, which can be more corrosive. So this is not a quick switch where we're just going to use 50% more ethanol automatically. So let's say that, going year round doubles. Let's just say, as an example, it doubles our current E15 usage. We go from 1 billion to 2 billion, and you take total ethanol usage from 14 billion up to 15 billion gallons. That'd be a 7% increase in ethanol usage, which you could see maybe U.S. ethanol exports are reduced because we use more domestically. I don't know. People want to know, like, why wouldn't this affect the corn market? And I think that my answer is I can't quantify in my corn balance sheet exactly what this results in, if anything, on the ethanol side immediately. The ethanol market doesn't have to equal the corn market. So it's very positive. Don't get me wrong about that. It's very positive. I just don't know that any fund trader is going to come in and buy corn because they saw this, included in the bill.
Soybean futures fell to fresh lows overnight. The most heavily traded March 25 contract fell below 970 per bushel for the first time. Key technical support was violated this week, resulting in additional selling pressure. The global supply and demand situation is projected to be hugely burdensome amid prospects of a massive Brazilian crop. While U.S. processors are slated to crush a record amount of soybeans this year, exports have suffered relative to the last 10 years.
So you've got this breakout on the March soybean chart to the downside. You had what they'd call a descending triangle pattern. And Brian Splitt's going to be on with Mackenzie to do charts today. And he's almost certainly going to point out some sort of measurement that's going to be like below $9 from a technical standpoint. Here's something interesting fundamentally. So USDA is projecting record world soybean ending stocks close to 132 million metric tons. 132 metric tons is 78% of this year's Brazilian crop, what's projected. That statistic is pretty staggering, that just in ending stocks at the end of the marketing year, you're going to have almost the equivalent of a full Brazilian crop. I mean, 3/4 of a Brazilian crop, which is huge. It just speaks to how burdensome the situation is. Brazil's weather looks damn near perfect. They don't have a problem. There's a lot of rain in the forecast. I think the crop could ultimately end up in the mid 170s, could be as high as 180. And that's why the bean market sucks. It's having a really tough time, and these last couple of days look especially bad.
Sovicon has substantially reduced its forecast for Russia's 2025 wheat crop. The Russian consulting group cut its projection by 3.7% to 78.7 million metric tons. The reduction is due to poor crop conditions, which are said to be some of the worst in decades. If achieved, this season's wheat production will be the smallest since 2021 and will also fall below the 5-year average of 88.2 million metric tons. Russia's winter wheat crop is estimated at 50.7 million metric tons, down 6.6% from Sovicon's previous projection. Spring wheat production was increased slightly to 27.9 million metric tons due to expectations of an increase in planted acres.
So that's a reduction to their Russian crop estimate, but they're still not that far below USDA. I think USDA is at 81 and change. Here's a good map from our friends at Crop Profit. Rainfall over the last 30 days in both Russian winter wheat areas and Ukrainian winter wheat areas, and that would be like the bottom, say, third of these shaded areas on this map if you guys are watching. They've had plenty of rain. So I think they had some issues with dryness when they were planting, but over the last month, the rain's been actually above normal. Russian winter wheat on average has seen 142% of its normal precipitation over the last 30 days. So I don't think it's a disaster. And of course, the wheat market does not care at all, has acted very, very poorly. And it's been really frustrating from a grain marketing standpoint.
The Central Bank of Brazil conducted 2 more dollar auctions on Tuesday. The auctions totaled over $3.3 billion, marking the central bank's 4th intervention in 3 days to stabilize the real. The measure halted the steep sell-off that caused the real to plunge by more than 20% this year to a record low. The currency ended the day yesterday 0.4% higher against the US dollar in Sao Paulo. Last week, the central bank hiked interest rates by 1% to 12.25%, with two similar increases expected by March. In November, Brazil's president announced tax cuts and spending reductions, but traders criticized the plan for being too focused on growth rather than improving the country's financial stability.
I know you guys aren't overly interested in Brazil's economic situation, but the currency pair with the dollar does matter, and the real is record weak versus the U.S. dollar. We talked about this yesterday, and I had a similar chart. This is a trend, the real being weak versus the dollar. This is a trend that dates back to like really 2010, and this is part of the reason that Brazil's been able to expand in the way that they have with regard to soybean production and exports is the currency situation. Brazil soybeans on the export market globally are traded in dollars. Brazilian exporters can lower their soybean prices in dollars while earning the same amount in their local currency when the real is weak. So this is an additional problem for the soybean market. But make no mistake, the soybean market is down and out largely because of the supply and demand situation. There's just too many damn beans in the world. The Brazilian crops have been too big. The U.S. crop was pretty big this past year. The currency situation is not a big deal relative to all of that stuff.
USDA reported multiple flash sales on Tuesday. U.S. exporters sold 7 million bushels of corn to Mexico for delivery during the current marketing year. Exporters also sold 7 million bushels of soybeans to Spain and 5 million bushels of soybeans to unknown destinations for delivery during the current marketing year.
It's been at least a couple weeks since we've seen a corn flash sale, so this is all good to see. Beans are becoming, even with the beans sell-off, I think Brazil is creeping up on us in terms of competitiveness. So I'll be curious to see how long this demand for soybeans sticks around on the export front. What did cattle do yesterday?
Cattle futures were mostly higher. Live cattle were 22 cents lower to 35 cents higher. Feeders saw gains ranging from 190 all the way up to 215. Box beef was lower. Choice ended the day at 315.63. That was down 174. Select ended the day at 288.50. That was down 107.
Outside market's fairly quiet. U.S. dollar's off a little bit. Stocks are marginally higher. Bonds are off a little bit. Precious metals are about flat. Crude oil is up 48 cents in the February WTI at 70.13. Have a great day, guys. We'll be back on Thursday.